Farmland values have been on fire despite mounting factors that some thought would pressure those values, forcing them to fall, like commodity prices and interest rates. But as we turn the page to 2024, is a correction in farmland set to take place? And if so, how much could farmland values even fall? That's this weekend's Farm Journal report.
From the $34,800 per acre land sale in Missouri that smashed records last fall, to the Sioux County, Iowa farm ground selling for more than $22,000 to start the year. It's proof the strength in the farmland market hasn't fizzled out.
The key point, without a doubt, is resiliency.
Paul Shadig is Senior Vice President of Real Estate for Farmers National Company. A new land report from the company shows even with declining commodity prices and elevated interest rates, farmland values are holding higher than expected.
And we really haven't seen no decreases to speak of, and still some really strong sales out there in the country.
Jim Rotherich is a farmland appraiser in Iowa and also watches the farmland market closely.
It's just remarkable how stable this market conditions have been.
Rotherich tracks land auctions across Iowa, inputting prices and analyzing data for land sales across the state.
Based on my data, my auction data, which is factual information, we're down 1% from last year. And I just think that's amazing that it held up that well.
Rotherich says, according to his analysis of farmland sales in Iowa between January 1st and January 30th last year, there were only 2 sales that topped $20,000 per acre. But from July 1st through the end of 2023, there were 7 sales north of $20,000 per acre in the state.
We had a post-harvest bump. I think the drought was affecting market conditions early on in the year. People were hesitant to push those prices. And when it got out there in the combine, they realized they had a better crop than they expected, and it showed up at auction days.
Shadig says Iowa's farmland market has been the strongest, but there are now other states bringing in eye-popping sales.
Illinois and Indiana have kind of picked up a little steam, and a lot of the sales that we're seeing out there are quite strong, in the $20,000 plus range.
Rotherich says he combs through 130 auction websites every 3 months, and recently he's uncovered one change.
One thing I noticed is the number of price reductions on the listings these companies had. I hadn't seen that before. So the market is being affected by high interest rates.
He's also noticed an uptick in no sales in auctions, yet cash rent auction data that continues to flow in shows surprising strength.
Some of the cash rent auction data I've got, it's just incredibly strong. There's just no weakness at all in cash rent auction data. So, some of those are 3-year terms. So it doesn't seem that we're going to have that big a correction.
Both Rotherich and Shadig say farmers are still in the driver's seat and in the majority of farmland sales today.
Over the past several years, when this land market really took off, the primary pool of buyers are those operating farmers, and they continue to be the successful buyer of land.
But there is still some of those investor types that are out there. They're still out there looking to buy land. There's still a lot of demand to buy land. Still a lot.
But unlike the headlines and political push to ban foreign-owned farmland, the one group they're not seeing buy farmland is foreign investors.
I talked to all auctioneers all over Iowa, and I don't know of any foreign investor buying farm ground in Iowa. It's the local competition that's buying most of this farm ground. I don't know of any. I know of 0 foreign buyers in Iowa.
As farmland values remain a focus in 2024, now the question is just how much of a correction could the farmland market see this year?
If we look back across the last 25 years, we've seen some run up in land values, and then it resets at a new normal. And I think that we're going to see that here, where I think in the next 12 to 24 months, we're probably going to see things the land values reset at kind of a new level.
The last time we had a run up, in 2013, 2014, the market, went down 20 to 25%. It just doesn't seem like it's going to do it this time.
Instead, Rotherich thinks farmland values could be setting up for a correction in the single digits.
When we look at from the buyer's standpoint, there are a lot of farm operators who are our biggest pool of buyers. And there are many of them that have set themselves up to expand and be able to handle a land purchase. And we have many sellers that are looking at their land right now and deciding that it's never been worth more than it is today.
Whether farmland prices lose footing, level out, or continue to find surprising strength, both Rothermich and Shattuck say buyer interest remains high.
Now, I also spoke to Mike Walston, who writes for Pro Farmers Landowner newsletter. He says he thinks the best case scenario is farmland prices hold steady this year. That's on better quality ground. He says poorer quality farmland will likely be weaker. Now, the more likely scenario, in his opinion, is a 5% decrease in farmland values, and that would continue going into 2025 through 2027. He says it's very possible the land market will see a 10 to 15% correction over that time. But if energy prices go crazy again, that could be more like 20%. Well, from attacks in the Red Sea to more protests in Germany, we'll have a look at ag around the world next.